The story of mt.gox, once the world's largest Bitcoin exchange, has been a cautionary tale for the cryptocurrency community. Founded in 2010, mt.gox quickly grew to handle over 70% of all Bitcoin transactions worldwide. However, in 2014, the exchange collapsed, leaving many investors in financial limbo. Now, 10 years later, there is a significant development. The long-awaited distribution of Bitcoin to mt.gox creditors is finally happening. If you find this video informative, please like and share it to spread awareness. mt.gox's rapid ascent in the cryptocurrency world was marked by its dominance in Bitcoin trading. By 2013, it had become the go-to platform for buying and selling Bitcoin. However, in early 2014, mt.gox abruptly halted withdrawals, citing technical issues and security breaches. Shortly after, the exchange filed for bankruptcy, revealing that approximately 850,000 Bitcoins has been stolen or lost, a sum that was worth around $450 million at the time. This collapse sent shockwaves through the market, causing a significant drop in Bitcoin's price and shaking investor confidence. This event underscored a crucial lesson for cryptocurrency users: the importance of controlling one's private keys. The adage, "not your keys, not your coins," became a fundamental principle, warning users against leaving their assets on exchanges where they could be vulnerable to hacks or fraud. In the wake of mt.gox's collapse, numerous individuals, including Bitcoin advocate Roger Ver, attempted to reassure the public. Ver's statements at the time, which suggested that the withdrawal issues were due to traditional banking problems rather than insolvency, have since been scrutinized and criticized. The rehabilitation plan for repaying creditors has been controversial, with some questioning the payout points and the timeline for distribution. Ver's statements at the time, which downplayed the severity of the situation, have also come under fire. Fast forward to today, and the process of returning Bitcoin to mt.gox creditors is finally underway. Reports indicate that up to $9 billion worth of Bitcoin and Bitcoin Cash will be distributed. This process, expected to start in July, has caused a stir in the market. In April 2024, updates to mt.gox creditor payment system signaled that the distribution was imminent. This was followed by significant movements of Bitcoin from mt.gox wallets, with over $9.6 billion worth of Bitcoin being transferred in late May. These developments were closely monitored by blockchain analysts who confirmed the transactions. The impending release of such a large amount of Bitcoin has sparked fears of a market dump, leading to panic among some investors. However, it's essential to put this into perspective. The 141,686 Bitcoins to be distributed represent only about 0.675% of the total supply of 20 million Bitcoins. While this is a substantial amount, the actual market impact may be less severe due to several factors. Many mt.gox creditors have already sold their claims to institutional investors who are known to be sophisticated players in the market. These institutions likely hedged their positions through future contracts or ETFs that track Bitcoin's price. When they receive Bitcoin from mt.gox, they may simultaneously close their short positions in these futures or ETF contracts, essentially negating the selling pressure on Bitcoin itself. The emergence of Bitcoin ETFs has arguably increased the overall depth and liquidity of the Bitcoin market. This means the market can absorb larger buy and sell orders without experiencing significant price swings. While a dump from mt.gox creditors might cause a temporary dip, a more robust market structure could help mitigate the long-term effect. The mt.gox saga serves as a reminder of the importance of self-custody in the cryptocurrency space. Users are urged to avoid leaving their assets on exchanges, which can be susceptible to hacks and mismanagement. Instead, they should store their private keys on a hardware wallet and become proficient in managing their own assets. As the market absorbs the news of mt.gox Bitcoin distribution, it's crucial for investors to stay focused on long-term strategies rather than reacting to short-term fluctuations. The lessons from the mt.gox continue to resonate, emphasizing the need for vigilance and self-reliance in the evolving world of cryptocurrency. The mt.gox bankruptcy and the ensuing decade-long journey to compensate creditors highlight both risks and resilience of the cryptocurrency market. As Bitcoin continues to mature, the lessons learned from the mt.gox will remain relevant, underscoring the critical importance of self-custody and cautious trading practices. For now, the market waits to see how the distribution of mt.gox Bitcoin will unfold and what impact it will have on the broader cryptocurrency ecosystem. With the advent of ETFs and other financial instruments, the market is better positioned to handle these distributions, ensuring that lessons of mt.gox lead to a more robust and resilient cryptocurrency environment. While the mt.gox saga serves as a cautionary tale, it's important to acknowledge the strides the cryptocurrency market has made in the past decade. Regulatory frameworks are evolving, security measures are improving, and institutional adoption is growing. These developments, coupled with the lessons learned from mt.gox, suggest a more stable and mature future for cryptocurrency space. However, vigilance remains key. As new investment opportunities and technological advancements emerge, investors must conduct thorough research, understand the inherent risks, and prioritize security best practices. The mt.gox fiasco serves as a permanent reminder of the importance of these principles in the ever-evolving world of cryptocurrency. If you enjoyed this video, please subscribe to my YouTube channel and hit the like button for more insights and updates on cryptocurrency. Thanks for watching.